to dive right into this. And part of the objective here is to talk through the trades. Very first thing that I want to do before I do that is set up the context. It's always a little tricky doing all this stuff on your own. So the high time frame showed an interest rate and currency divergency that I was interested in. And in the context time frame, I saw a daily level tested. It was a day a week that mattered to me, might be a waking action. We had an obvious daytime level to reach for. And in the execution time frame, there was a 15-minute breaker underway. We'll dig into this, but there was a 1 hour breaker level that was possible. If we continue to break higher, then we've got a trap trader situation. And the daily support level had been swept. So that becomes interesting, something to think about. Now, following trade process management, I'm basically asking a few questions. What is the market reaching for? Well, I talked about that a little bit. I also saw a smart money divergence short early that suggested to me that there was some manipulation going on. And I was asking myself, where are we in the power of three? Well, we might be creating a wick for the week to run higher. So we could see a stop run on a breaker scenario that had already occurred, and the 15-minute might happen on the 1 hour. So then if that was going to be the case, what daytime frame level should be tested? Well, the small gap above if we're right, and the mean threshold of the support level below if we're wrong. What news might generate that? Well, housing starts. So we saw that. And then what does the 4 hours say? Well, it was inconclusive, which means that we're operating on a lower time frame, meaning moves may not last as long as we think. What does the 1 hour say? It's inconclusive, but there was a possible breaker scenario that did activate today. What does the 15-minute say? Well, there's a breaker underway, and we've impulsed away from it. So we've at least validated that on that time frame, things are going on. Now, where was the optimal internal to external liquidity run? And it appeared to be long to me. So as I break through the three best trades of the day, it was a 742 contrary bias trade. It was a bearish breaker, short, into support. 946 equilibrium pullback to the long support, and then the 1131 retest of the 1 minute support. So those were interesting. I'm going to go over those momentarily. The three daytime features I want to call out is the 15-minute market structure shift, which means a possible context shift bullish. The 1 hour breaker was activated and tested, and that gave us an idea that there might be a higher time frame market structure shift underway. And the bullish close on a sweep of lows on the daytime frame is a bullish signal. So expectations for tomorrow are the same as yesterday. We're going to rally into daily resistance or through it, or we may consolidate and drift lower. So we will see for sure. Now I would like to transition to the charts. Let's pull those up. All right, so as you see, we'd opened up with this 15-minute move, this 15-minute time frame. You see these lows here, impulse away, so possibly everyone down here is trapped below that low, so everyone down here might be trapped. And that means that in this area, we may see support, and if we get above this area may be support. So that was the idea that I had coming into the daytime frame level of yesterday. As you take the trades and you break them apart, this is the 1 minute. You have the news open, take out this liquidity and pull up to here, right where I thought it might. In this area, you've got that breaker. So get short into support, which was right down here into 24. It ends up going a little bit further than that, and then turns right back around. I did get long here. This is where I wanted. I saw this trade and I elected not to take it on the basis that I wanted to only focus on the bias that I'm interested in, which is long. And you can see that I projected a much longer move. I think tomorrow this is where we will get up to 3,900, but we didn't get there today. So what happens is I get in, I scale out at resistance levels, it goes further, and then ultimately comes back and takes me out of this pivot right here before creating the third best trade of the day, which is a support level inside of a pullback below equilibrium, and then a hold on this support level here, this order block that continues higher, and then the expectation would take out that high, and then it does at 138. So if you want to talk about this, if this is the kind of thing that interests you, I'm not a trading coach, but I do offer a workshop, and the workshop is meant to break down your processes. So I'd like to, I can show you an example of that, and I'd like to do that as a part of this video, just to show you a quick example of the kinds of things that people can get when they have somebody who knows how to break down their process. And it's important because biggest problem that we have in trading is not understanding our process. I mean, there's a lot of things involved in it, but this is really what it looks like. So I'd like to share that with you now and have you consider the possibility that it might be the right thing for you.
Yeah, and again, I'm going to contend that the issue is not psychology, although you're feeling the psychology. The issue is the lack of awareness of process and the ability to stick to it. So let's go back to the execution. So low flow, you see a gap up, and then you are waiting for a pullback on a low time frame. Okay, so let's take it further. I want you to break that process down even further. Tell me, what is inside the guts of that pullback?
Typically, what I've started doing was there's an initial impulse up. It pulls back.
What's an impulse?
An impulse is like a swing high.
Okay, so we got a swing high.
So we have a swing high. It pulls back.
On what time? Sorry, I'm punchy. That I like to jump right in because it's helpful over time. I promise. So you got a swing high on what time frame?
A 15-minute chart.
Okay, swing high on 15. So that means that we have 45 minutes of time that's elapsed. Is that correct?
Is the definition of a swing high 3 candles?
Yeah, you got a lower high, a higher high, and a lower high.
Okay, no, maybe I'm not.
Do you? I mean, you could define. That's the classic definition. But tell me yours.
Really, just an impulse. It could be a number of. It does the amount of candles doesn't matter. The way that I'm describing it, it's just a breakout.
So basically, So a breakout on the 15-minute candle. Okay, so does the 15-minute candle have to close, or is a big wick matter, or is it? You think it's a breakout, but what makes it not a breakout? When would you know that it wasn't a breakout?
If it lacks, I don't know. If it if the candle doesn't close green, and it pulls significantly below the breakout zone.
Okay, so that's interesting. So in your breakout, we can go below the open of the breakout candle and it still be valid?
I'm not sure. Yeah.
Well, let's keep digging.
I'm sure
And there you have it. I'm Joshua Barnes, and I'm here to help you. This is exactly the kind of thing that you can expect when you work with me doing our trader workshop. Our job is to uncover the process errors you're making in your trading. Join me. Sign up today